Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news of positive economic indicators out of China today. But first, the World Trade Organization has cut its forecast for global trade growth this year by more than a third. The new figure of 1.7% is down from its April estimate of 2.8%, which would be its slowest pace of trade and output growth since the 2009 financial crisis. At the same time, the IMF is warning on the dangers of populist moves for more protectionism, saying it will just deepen the fallout from lower trade levels. Sea cargoes are where the weaknesses are. Air freight volumes are still showing healthy growth. Not measured in either of today's WTO or IMF releases are the trades in digital goods and services, both of which are growing strongly. Independent markers for the health and direction of the Chinese economy are improving. Both electricity production and railway freight showed good gains in August, the third consecutive rise in these indicators. These suggest real growth of about 3%, a long way lower than the 6.7% official measure, but an improving trend all the same. Adding to the sense of improvement in China, profits of China's industrial corporations jumped the most in 3 years, boosting profits for their ability to repay debt. At the same time, China's foreign debt levels in June were announced, and they pointed to growing liabilities. The deleveraging we've seen from Chinese companies has now ended, and rising corporate debt levels are back in vogue. That's what the country's foreign exchange regulators said when they released the data. This new spurt in Chinese activity abroad is also showing up in tourism. About 120 million Chinese travelled overseas in 2015, up from 109 million the previous year. That's according to the Chinese National Tourism Association. They forecast that these numbers will reach a staggering 600 million by 2021. Even today, Chinese overseas travel is the largest from any country. In 5 years' time, it'll be 5 times as large. For New Zealand, that could be an overwhelming number, as it could be for most other countries too. In New York, the US Treasury 10-year yield has fallen again today to 1.56%. The spurt in oil prices we saw yesterday was reversed today, with oil prices down by 3%, dashed by the usual Saudi-Iranian tensions. The US benchmark price is now just under $45 a barrel, while the Brent benchmark is now just on $46 a barrel. The gold price is also much lower, now at $1,329 an ounce. And the New Zealand dollar will start a touch higher today than this time yesterday, at 73 US cents, and on the cross rates is at 95.3 Aussie cents, 65 Euro cents, and the TWI is now at 76. I'm David Chaston, and that was 90 at 9, brought to you by interest.co.nz.